Oh yeah, that battery can last up to 24 hours even with the always-on display turned on. It's pretty cool.
All right, let's dive in. And forget about those old dusty accounting textbooks, okay? Today, we're doing something different. We are building a practical, hands-on toolkit. These are mental models that are going to make you a much sharper, smarter decision maker. We're going to learn how to cut through all that financial noise and really zoom in on what truly matters. And this works for everything, whether you're launching a new product at work or, just trying to buy a car. So, you ready? Let's get to it.
So, here's the game plan for building our toolkit. First up, we're going to talk about that classic problem, decision paralysis. You know what I'm talking about. Then we'll craft our two main tools to fight it. We're calling them the control spectrum and the relevance filter. After that, we're going to take this new toolkit for a test drive with a super relatable real-world example. And to wrap it all up, I'll show you how to put it all together into a simple framework you can start using like today.
Okay, let's talk about decisions. If you're a manager or really anyone who has to make choices, you know the feeling. You are just drowning in data, right? You've got questions coming at you from all sides. Should we launch this new product? Do we invest in that facility over there? Which supplier should we go with? And here's the kicker. Every single one of those options has a price tag, financial consequences. And when you try to juggle all of that in your head at once, man, it's totally paralyzing.
And that really is the million-dollar question, isn't it? When you're staring at this massive sea of data, spreadsheets, reports, everyone's opinions, how in the world do you separate the signal from all that noise? How do you just cut through the clutter and get to the real financial core of a decision? Well, that's exactly what we're here to do. Let's build the tool that lets you do just that.
Okay, on to our next section, the control spectrum. This is the first tool we're going to pull out of our new toolkit. I want you to think of it like a special pair of glasses, a lens you can use to look at any cost. We're calling it the control spectrum. And really, it all comes down to helping you answer one super simple question. Can I actually do anything about this?
So picture this spectrum, right? On one end, you've got your controllable costs. These are your levers, your dials, the things you could actually influence and change. But on the other end, you have the uncontrollable costs. These are the expenses that are they're locked in. They're a result of decisions that were already made, maybe months or years ago. And just being able to tell the difference between these two, that's the absolute first step to thinking clearly about any financial choice.
Okay, let's get a little more specific. What exactly is a controllable cost? Well, it's any cost that management can influence or change. But here's the really important part, the key phrase, in the long run. And this is a huge idea, so don't miss it. What it means is that if you have a long enough timeline, almost every single cost becomes controllable. Seriously. You can renegotiate a lease when it's up, you can find a new supplier, you can invest in more efficient technology. It's all about realizing you have the power to make these changes, you just need to think about the timeline.
Now, on the flip side, you have an uncontrollable cost. This is a cost you're basically stuck with, at least in the short term. It's the direct result of a commitment you already made. So think about that 5-year lease you signed on the office last year, or that big piece of machinery you bought. The decision was made, the ink is dry, and now, for the length of that commitment, that cost is pretty much set in stone.
And this quote right here, it just nails it. Companies get locked into costs because of things they decided to do in the past. It's so simple but so true. The choices you made yesterday create the budget constraints you have today. And if you're a manager who can't see which of those costs are locked in, you're going to waste a ton of time and energy fighting battles you just can't win. At least, not right now.
All right, enough with the theory, right? Theory is great, but let's see how this stuff actually plays out in the real world. We're going to take a look at a fascinating company, the aircraft manufacturer Bombardier. I mean, think about it. Their operations are huge. They're super complex. They are the perfect example for us to try out our new control spectrum lens.
So imagine you're Bombardier. You've got these gigantic manufacturing plants, right? The decision to build those factories was made way back when. So today, all the costs that come with them, things like property taxes, insurance on the buildings, those are uncontrollable in the short term. The CEO can't just pick up the phone and say, "Hey, City Hall, can I get a break on my taxes this year?" It just doesn't work like that. Those costs are locked in because of those big decisions made in the past.
But, and this is a big but, that doesn't mean they're just helpless. Not at all. Management has a ton of controllable costs, a whole dashboard of levers they can pull. For example, they can decide to pour more money into R&D to design a jet that's way more fuel efficient. They can crank up the advertising budget to sell more planes. They can send their team to negotiate harder with suppliers to get a better deal on aluminum. See? These are the dials they can actively turn to steer the company's future.
Okay, next up, the relevance filter. So we've got our first tool in the belt, the control spectrum. Now it's time to add the second, and this one is a game changer. It's called the relevance filter, and with this tool, we get to be surgical. It's all about looking at a specific decision and filtering out every single piece of financial info that is just noise.
So what does it mean for a cost to be relevant? The definition is so simple, it's almost beautiful, but it is incredibly powerful. Here it is. A cost is relevant only if it's different between your options. That's it. If a cost is going to be the exact same amount whether you pick option A or option B, then for this decision, it is completely 100% irrelevant. It's really that simple.
And you know what? That difference in cost between the two alternatives, it actually has a name. It's called the differential cost. Now, this isn't just some boring accounting term to memorize. It's the number that actually matters. It's the bottom line. It tells you the precise financial impact of picking one option over the other.
So look, if you take away one thing from this section, let it be this. I want you to burn this rule into your brain. Ready? If a cost doesn't change, it doesn't matter for the decision. You have to ignore it. It's just a distraction. And focusing only on the things that change, well, that's the secret to making crystal clear decisions.
Okay, we've talked enough theory. Let's get our hands dirty and put this new toolkit to work on something that probably everyone here has thought about: buying a car. This is where the rubber meets the road, literally. We're going to see how these big-shot business concepts are actually super powerful for making better choices in our own everyday lives.
So, let's set the scene. Imagine you're in the market for a new car. You've done all your homework, you've read the reviews, and you've narrowed it down to two solid choices. You kind of like them both, but you want to be smart about the money. So, in one corner, we have the Nissan Sentra, and in the other corner, the Toyota Corolla.
Okay, time to use our relevance filter. Let's go down the list. Is the purchase price relevant? Well, yeah, of course, the prices are different, so check. What about sales tax? Since it's based on the price, it's also going to be different, so yep, relevant. How about your insurance quote? The numbers are different, so that's relevant too. Now think about something else, like the fee to renew your driver's license. Is that relevant to this decision? No, it's going to be the same amount no matter which car you buy, so it is irrelevant. We can just toss that piece of information out. We don't need it.
First up, let's look at the sticker price. The Nissan Sentra is going to cost you $14,480.
And the Toyota Corolla? It's a little bit more, coming in at $15,345.
So what's the difference? That's our differential cost, right? It's $865. So at first glance, the Corolla is more expensive. Easy choice, right? Go with the Nissan. But wait, that's not the whole story. Remember the insurance? The quote for the Corolla was actually $46 a month cheaper. Over a whole year, that's $552 you're saving. So it's not so simple, is it? To make the really smart call, you have to look at the total differential cost of all the relevant stuff: the price, the insurance, maybe even gas mileage. That's how you get real clarity.
All right, let's get to our strategic takeaway. It's time to zoom out and assemble our complete decision-making toolkit. We've got our two key tools: the control spectrum, which helps us see what we can actually change, and the relevance filter, which helps us focus only on what matters for the choice right in front of us. So the big question is, how do we put these two together into one powerful, easy-to-use strategy?
Well, here it is, a simple 4-step framework you can use for pretty much any decision. Step 1, just get super clear on what decision you're actually trying to make. Isolate it. Step 2, pull out the control spectrum. Get a lay of the land. Which costs can you change and which are locked in? Step 3, apply that awesome relevance filter. Ruthlessly ignore everything that's the same between your options. And finally, step 4, calculate the differential cost. That's the number that will light up the right path. This whole process takes something that feels messy and complicated and turns it into a simple, clear choice.
So, I want to leave you with a question to chew on. Think back to what we said about controllable costs in the long run. What's one cost, either at work or in your personal life, that you've just been treating as fixed? You know, like it's totally out of your hands. Maybe it's a subscription service, a contract with a vendor, even just a recurring bill you pay without thinking. What's something you've accepted as uncontrollable that maybe, just maybe, isn't? Because finding those hidden levers you didn't know you had, that's where becoming a truly great decision maker really begins.